What's up, everybody? It's Stephen A. Williams, president and founder of the creditrepairshop.com, and this is part 3 of how to get a 1099-C from original creditor or debt collector. And what we talked about in this is where if you want to try to save your credit, options on being able to do that in video number 1. Video number 2 was where you were still dealing with the original creditor, but your credit was destroyed, and I gave you options on what you would need to do to take care of the debt with the original creditor and still potentially get a 1099-C. And then in today's video, we're going to talk about if your debt was sold to a debt collector, because there's 3 different paths to, number 1, being able to get a 1099-C, and then number 2, being able to either have your debt to where you won't even have to pay it at all if it's sold to a debt collector, which we're going to get into right now. And then also with option number 2, which was in video number 2, was where you would, set up settlement arrangements with your creditors. And I showed you how you were able to actually be able to get funds. So please watch these videos. I know that they could be a little bit long. They could have a lot of details in them. Watch it over and over and over again, because this is the way that I'm going to put it, is we get a lot of calls and people are very emotional about their situation. Having a debt collection company or having an original creditor sue you and take your money out of your bank account, or just applying the pressure on you, or just having the pressure of all of the debt that you're facing constantly just weighing down on you. And you get, and I talk about it where people get the feeling where they go to work, come home, and pay bills. That's like their existence. And I don't want you to have that existence. But to not have that existence, you're gonna have to kind of buckle down and learn some stuff about what you have to be able to do. And you have to learn some real stuff, not none of this fake stuff that you see all over YouTube. Not to say that all of it is, but a real solution, which is what I give to people, it takes work. And it's always going to have some variation depending on what your specific situation is. So keep that in mind. There is no quote unquote direct template that works for everybody. Everybody's situation is different. And I think that's one of the things that get people frustrated. So let's just do a quick review. I call it a 1099-C cancellation of debt because we've actually been able to assist our clients with original creditors who have owed, the highest amount was $36,000 on the credit card debt, to be able to manage a hardship through that credit card company for that debt and get a 1099-C to where the debt was forgiven. Now, that won't happen for everybody. And there's specific situations that they look out for. In review, they mainly look for provable medical and provable family hardships. And I did mention one with Master Lock in my area where the job was shut down. And I think it was Yellow was the truck company. Stuff like that could play in your favor, because that is not a fault of your own. If you lose, the company decides to close down, you're going to have time to readjust. Now, without even getting the 1099-C, without them accepting your financial hardship due to your job loss, without them accepting your medical or your family, these are the steps that I told people to do. And this is just a quick review. To save your credit, what you could do is you could ask for deferments, 3 to 6 months on all of your payments, everything that you have. That's a consumer debt. It could be your car, credit cards, loans, all of that stuff, even student loans. Everybody really knows about it for student loans. Get those deferments, but this time what I want you to do what I want you to do is I want you to put that money aside to reestablish your household situation. When I say that, that means that get that under a good foundation. Have some money put aside for an emergency and start looking at the debt that you could pay off or pay down to be able to have cash flow in your house. Because really the whole problem is that you've just outspent your income. All of the, like, you did small payment after small payment after small payment, and now you go to work and all your money has to go to pay the debt service on all of that consumer debt that you have. So the way that you can do it without ruining your credit is get deferments and start looking at what debt can be paid off or paid down. You got to put this on paper and commit to it and stick to it. That's where that hard work comes in. That's why people are always running around for some type of quick gimmick trick to get to be able to get this type of stuff accomplished, and it just doesn't exist. Now, if you happen to get a 1099-C, it is still going to harm your credit, because let's just say that the original creditor sees your hardship. They say, hey, we're going to forgive the debt, send it to the IRS. You can get a waiver to not have to pay taxes on it, but they are going to put it as a charge off on your credit report. So don't think that they're just going to do this and there's not going to be any type of repercussions to you when it comes to your credit. People have those types of thinking. They're like, well, forgive the debt, and they're going to some secret account that under my Social Security number to get the money. That stuff doesn't exist. Get that out of your mind. That does not exist. So if they do decide to do a 1099-C and you were trying to save your credit, I want you to know that the next month when they report, they're going to put that account was charged off. It was closed and then charged off. And you might get upset and say, well, it didn't get charged off, it got forgiven. They have to do that for banking regulations. They can't just write stuff off and let it disappear. They have to have a paper trail showing what happened, and part of that paper trail is a process that must happen on your credit reports. Now, you could deal with getting that removed later, but I'm just telling you that is what's going to happen. So if you get deferments, you can also talk to them about getting your interest rates reduced for a period of time, and that would automatically reduce your payments. And if you're not getting to any of these solutions, it's because they don't believe you. They don't believe you. So you might be saying, well, I called them and I talked to them and all of that. Let's just be bottom line, because we've done this. I've even had to do it for myself in the past, in the 1990s, when I learned about how to do all of this stuff. And it's even easier to do it now. Back then, they didn't really give a damn about all of that. If you were struggling, they didn't even care. Now, times have changed. People got a little bit more feelings and understanding with dealing with people. And also the laws have changed to kind of benefit us as consumers. But no company out there is just going to throw away money. No company out there is just going to throw away money. And those reps that are sitting there, they act as if that is their money. And in essence, it is. Because if their company cannot collect money, guess what? Their company can't pay them. So you better believe it's going to take work to get to, number one, to the right department, and then number two, to get that department to believe what you're trying to tell them. It should be done in writing, and it should be done over the phone. It will take work. We do this all the time, and it will take 3 to 4 phone calls, and you get assigned to a rep, and that rep, I can just tell you from experience, that rep's job is to try to weed out all the BS and to try to get to the bottom line to see what types of decisions can be made regarding a specific account. So that's what happens with those there. So now let's move forward. I had talked about how you can, if you work 40 hours a week and you're paying all of these debts, and I gave the example of how your money ends up getting taken away, and that's because you get approved for a card, another card, or you go get another loan, and all of that stuff starts adding up. But This is also what I talked about in video number 2 is where, and I know this is a lot, really scrambled up, but is that you can actually, after your credit is ruined and tore up, what you can do is utilizing those payments that you have is save the money up, and then you just put together a plan and you approach your creditors. These are the original creditors, and you tell them, hey, I'm going to put together a plan and be able to pay, make settlements on my accounts. And then on this example, though, as I had said, gave an example of when you're utilizing debt settlement companies or debt relief companies, because a lot of people end up running to those type of companies because they hear the advertisements on TV and they say you can settle your debt for less than what you owe, 50% or 25%, whatever they say. And I tell people what they do is they pull you in by saying, hey, you're making all of these payments, maybe $2,000 a month. You keep $1,000, send us $1,000, and we're going to use that money to settle your debt. But this is where a lot of people get upset, is that they're paying those payments, which they probably are struggling to even pay those payments. And then when they get to where they want to settle the debt, the company, what people start to realize is that they can't settle those debts because those debt settlement companies are going to settle that debt plus 25%. So what I mean by that is, say for instance, you had a debt for $5,000 and the company said, we'll settle it for 50 cents on the dollar. We just want to be done with it. And you have $2,500 in your account, in your escrow account. You know that from the payments that you put out. And then you went and you said, well, hey, they want to settle. They sent me this letter saying that they want to settle for $2,500. And they will send that to you. And then the debt relief company or debt settlement company says, well, we can't settle it. And you're like, why? And that's because that 25%. They're going to charge you a percentage on each of your debts. And this is one of the misconceptions and one of the biggest frustrations people have with debt settlement companies. Also, you need to know that debt settlement companies will not stop you from being able to be sued. That you could still be sued and they will not represent you in court at all. What they're hoping is that because you're in a debt relief program, that the creditors will just hold off and wait for that day to be able to be paid. Not to say that they won't, but this is what they're hoping for. Your debt could be sold, and that's what we're going to be going into in this next slide here. So this is the path, and this can happen regardless if you're with a debt relief company, that this is the path that can happen. And this is the path that really frustrates a lot of people, because if you are ready to move forward, let's just say that you were struggling for a year, and then you're ready to move forward on getting rid of your debt because you are ready to buy that dream house. Like you got some money under your belt, you got your down payment, you're ready to move forward, and you reach out to the original creditor and they say, well, we cannot settle that debt. We don't own it anymore. And then you say, well, who owns the debt? And they say, we can't tell you that. That automatically would just bring up a whole bunch of frustration with people, because they're like, I'm ready to make a move and I can't make a move. Why can't you take the money? The reason why they can't take the money is because they've sold it. They've sold all rights to your debt. And then what happens is you get frustrated and you're like, well, why is it still on my credit report if you sold it? And you could deal with that. I have videos on how you could deal with that, because they technically have taken money for less. So there's two options. They could either remove it or they could put on there paid for less, because they accepted that money. But the frustration, the biggest frustration, is that people are not able to move forward because they're like, we can't take the money for it. So this is the path. And because of the Supreme Court ruling that happened a few years ago, it even frustrates people a lot more, because let's just say that you do find out who owns that debt. Like somehow you end up finding out who owns that debt. It's usually going to be sold, well, not usually, it's always going to be sold to a portfolio company. It's going to be sold to a portfolio company. And these portfolio companies, because of the Supreme Court ruling, they do not have to do a debt validation. So if you find out that a portfolio company bought your debt, you're trying to move forward on being able to get your dream house, and you're like, I need to deal with this. I know that you own this debt. This is what they would be able to do until they decided to actually act as a debt collector on the debt. They would be able to maintain that debt and not have to do a debt validation. You can go look this up for yourself. Supreme Court Justice Gorsuch was the leading, I guess he wrote the, what do they call it, for the prevailing side, he wrote that ruling. And he said that because they bought the debt, they do not have to do a debt validation because they're not acting as a debt collector yet, or they're going to sell it to someone. So they could actually maintain that debt, and you will be so frustrated because you couldn't deal with the original creditor. They sold it, and you can't even do anything with the portfolio buyer other than potentially settle the debt for 100% of what the original creditor had it for. And I already know people don't want to do that, but this is the way that the rules have been written. But when they start the process of debt collection, this is what they're going to do. That portfolio buyer is not going to actually go into the debt collection business because they don't want to have to break that rule of validating that debt. They want to hold that debt so they can sell it off to their collectors, and their collectors will end up becoming the party that has to do the debt validation. So what that does is it shields off the portfolio company. And so if any of these companies, and what I see a lot is that this portfolio company actually opens up LLCs for all of these collection companies. And that way, if anything was wrong with the debt that they purchased from the original creditor, that they would be able to protect the overall portfolio company, and then they would be able to close down or settle with the collection agency that had the violation. So when the debt collection company gets the debt, this is when everything starts for you on being able to deal with this debt. You could still potentially get a 1099-C. If you go to any debt collector's website, you will see that they have a page on there where they talk to people about hardships, where you can express your hardship. It is still up to them to make that decision, but they do listen to that. And it is a gray area on if they could file a 1099-C for the total amount when they did not pay the original creditor 100% for that amount. They paid pennies on the dollar, and then they didn't pay the portfolio company 100% for that debt. They paid pennies on the dollar, or it was passed down and assigned through. But you can see how they could play that game. So once it's sold to a debt collector, this is what a debt collector is going to do. They're going to do what's called a skip tracing to see what's going on in your life, to see how you're living your life, your credit, all of that stuff. The three major credit reporting agencies, TransUnion, Equifax, Experian, have products for debt collectors and for other companies that want to utilize this, private investigators, people like that, or companies like that, where they could do what's called skip trace. That's where they can find all of your addresses, see what you're doing, your job, income, what you're paying on, all of that stuff. They're going to skip traces, and they're going to make determinations on if they want to come after you for that debt. Then you're going to receive that what's called a dunning letter. This is a letter that you're going to receive that's going to identify the collector, the original creditor, and that they're going to make a demand for payment. But it is not really a demand for payment. It's a letter saying that if you would like to dispute any or all of that debt. Now, the things that you need to pay attention to that could be a violation, this is where you start to prepare yourself for potential violations to be able to get to not have to pay that debt. And I don't want you to feel bad about that. If a debt collector has the debt, they assume the responsibility. And because they're not the original creditor, you do have a right to make them go through that whole process because you never signed a contract with them. So don't feel bad. Don't allow people to try to make you feel bad if you end up not having to pay a debt collector because of their violation. So the first thing we want to look at is on that dunning letter, we want to make sure that that letter was not sent by a third party. So when I say third party, they cannot use a mailing center to send you anything. They cannot have a mailing center send you anything because that's a violation. They cannot share your information with a third party. You might be saying, well, how can this party do it with this party? You know, or from here to here to here. That's, you know, they're sharing it with that. That is something that you would be bringing up if you found it. But you probably would not find out that a portfolio buyer had your debt until you got to a court situation. And I'll talk about that in other videos. At the point that you would, the knowledge that you would have access to with what they're going to give to you is that straight up they're going to just say that they bought the debt and that and they're going to identify the original creditor. They have to identify in that letter, number one, that you have a right to dispute any or all of the debt. Any or all of the debt. The font size must be the same throughout the letter. They cannot have a big letter stating that you owe the debt, original creditor, amount, and all of that, and then down below have it in small print for telling you of your rights that you can dispute any or all of the debt. They cannot do that. That would be a violation because they're trying to mislead you about what that letter is actually about. The next thing is if they call you first. This is a gray area, but it is written in the Fair Debt Collection Practices Act that they cannot call you first. They try to do that because they're trying to minimize the money that they're spending sending out those letters. So they try to call you to see what they could do. You'll find this with a lot of the smaller debt collection companies. They're going to call and then, try to move forward once they make contact, or they hope to get lucky and get the person to pay the debt. Or they try to call and get a person to reset the debt. So you got to watch out for a lot of stuff. So what I tell people to do is you just tell them, you don't answer any questions. You just say, if you're calling me, you have my information, you just send me to whatever address you got, you send me that information. Once you get that information, you want to double check on this, you want to double check on this. Once you have the letters, you have all this stuff, this is what I want you to do. I want you to check the statute of limitations because a lot of debt collectors will send out debts that are past the legal statute of limitations to collect because they don't expect you to know your rights. Another thing that you can pay attention to is on that call, when they call you, is that if they say that we're calling you about a debt that is time barred, they will not say past statute of limitations. They're going to say, we're calling you about a debt that is past the time barred limit, or they'll just say that is time barred. And what do you want to do about paying it? That is another way of saying that you have no legal obligation to pay that debt. It is past the legal statute of limitations to collect. And yes, there are plenty of debt collectors that are coming after people for debt that is past the legal statute of limitations to collect. So the next thing you want to do is you want to check the statute of limitations. You can go to my website, thecreditrepairshop.com, to check that out. The next thing is you want to do the debt validation with the debt collectors. That's where you're going to do. So if it's not past the legal statute of limitations, you want to submit a debt validation to them. But the way that I tell you to do it is to do it in steps. So I'm going to give you a letter at the end of this video. I'm going to tell you how you can get a letter that's actually going to be a step above doing a debt validation, because you can kind of walk into a trap with a debt validation, because what they're going to do is they're going to send you what they got from them, which is what they got from them. And that's according to the Fair Debt Collection Practices Act, that's all they have to do, a couple of statements and just show where they got the debt from. So you want to take it up a step, because what you want to do is you want to prepare yourself just in case they try to take you to court on that debt. You want to start getting all the information, and they don't expect you to do that. That information is going to be making that portfolio company give them, which is going to be like a step down from the original creditor, but everything from the portfolio company, which is from the original creditor. And once you get that, you're going to start looking for any issues here. So let me define that. You want to see if there was any issues with the original creditor, with any lawsuits. There was several lawsuits with Wells Fargo. There was one with Bank of America, opening up fraudulent accounts, whatever, charging people undue fees, just all types of stuff. So you want to see if any of those issues could be utilized to be able to stop them from their collection activities. The same with the portfolio buyer. Once that's identified, I'm going to give you a letter that's going to be able to get that documentation to identify who the portfolio buyer was, and you want to see if there's any issues with the portfolio buyers. And then the same with the debt collectors, any issues with the debt collectors. So what you have to do, and that's why I say you're going to have to do some studying, is that if there's some issues with one of the debt collectors, like LVNV Funding, they had some issues where they were, harassing people, not harassing them where they're like calling them certain names, but where they were calling people too many times, or they were not following the debt validation process. You just never know. You want to find out those issues, and then you want to look at what you've received from them and see if any of those issues can be found. And you want to make sure you do that with the original creditor, the debt portfolio buyer, and the collection companies. And I'm going to give you a letter to get all of that started. The next thing, and there is nothing wrong with this, if you need to be able to move forward, because don't let your wealth be stopped just because you don't want to take care of a collection that you potentially have to pay. And I tell my clients this all the time, or we tell our clients this all the time. If your overall goal is to just deal with this and just get it over with, then you do the debt validation process, because you should never pay a debt that cannot be proven that that account has everything to prove that you should have to pay it. But then you should move forward rather than the back and forth. You should just say, okay, now let's move to a settlement phase to be able to deal with this debt. So if you owe them $5,000, you know that they got it for pennies on the dollar. You could approach them with saying, hey, I would like to pay $500. And you just work your way up with that back and forth. So there is absolutely nothing wrong with doing that. So this is the flow chart of, so to speak, flow chart of what you would need to be going through. And this is the third phase. So you could potentially still get a 1099-C, but this is where a lot of you who watch my videos are at. Like, some of the times you might be thinking that you're over at the other end when you're not at that end. You're really right here. If you got debt, if you have collections on your credit reports, this is where you're at. This is like this. You need to watch this video over and over and over again, because this is exactly where you're at in the process. And this is what we would do for you if you were one of our clients. And this is what you can do for yourself if you need to, if you want to get your credit resolved and be able to get these debt collectors off your back, be able to resolve them, get that stuff removed so you can move forward in your life. All right. So if you need help with your credit, please visit us at thecreditrepairshop.com. Watch the video, What Makes Us Different, so you can see my 8-point validation process, my 2-phase settlement process. If you need your credit reports and scores, please go to the website, your3scores.com. YOUR and the number 3 scores.com. If you get your credit reports from there, we will do a free review just to let you know what we would do, or tell you what you could do to be able to help yourself with your repairing your credit. Now, if you have debt collectors coming after you early in the game, like I told you, I'm gonna keep my promise. What you could do to deal with debt collectors if you find yourself in this situation here: grab my 3-pack of letters. If you have debt collectors coming after you for debt that is past the legal statute of limitations, I give you a letter. You do not have to do a debt validation. You just have to notify them that they're attempting to come after a debt that is past the legal statute of limitations to collect in your state. The next letter, which I said was a step up from a debt validation, is a cease and desist collection activities letter. This is a letter that they don't expect you to utilize against them. It asks certain questions that they do not expect the ordinary consumer to be able to ask, because they're just like, all they're going to do is focus on the debt validation. So if they do decide to continue coming after you, though, after you send that letter, then I give you a debt validation to go back and forth, and then you need to potentially prepare either for settlement or prepare for them to be able to take you to court, and then you will have ammunition to be able to beat them in court, and I have videos on helping you with that. Thank you for your time. This is Stephen A.